When the pandemic happened, the government spent a lot of money on stimulus programs that they did not have. And in order to finance these stimulus programs, the government went to the Federal Reserve Bank, who then printed this money and lent it to the government. Now, people had the ability to save more and build more wealth, which was good for people, but it came with a consequence, which was higher inflation. Now, in order to fight this inflation problem, the Federal Reserve Bank had to change what they were doing with money, which was now they had to start raising interest rates. We saw this happen in 2022. Now, the Federal Reserve Bank started to raise interest rates, they started to change things in the economy, but that also caused bond values to fall. Now, during the pandemic boom, banks were going out and buying bonds like crazy. We now are seeing the largest bank holdings of bonds ever before compared to pre-pandemic times. Well, now because interest rates are also rising, the value of these bonds are falling while interest rates are still high. And remember, higher interest rates lead to lower bond values. So now you have a lot of banks holding on to large amounts of bonds which are sitting underwater, which is now where Ray Dalio is pointing to, well, the long-term debt cycle. Ray Dalio says, I believe the next significant increase in monetization will probably signal the last and probably biggest leg of the long-term debt cycle's reduction in the value and burdens of debts. Now, if you're not familiar with Ray Dalio's long-term debt cycle theory, I will link some resources for you down in the description, but the whole idea is that every civilization and every empire goes through these cycles, and the cycle is essentially first you start to grow, and then as you grow, you want to continue sustaining that growth, and the way that you sustain that growth is now you start printing more money, and that creates a devaluation of the currency. And as you start to devalue the currency, that starts to lead to the decline of that empire. So if you want to learn more about that, I'll have some resources for you down in the description. But if you do want to learn more about how do you build your financial education and how do you start investing and how do you protect your money, we have this free ebook at Briefs Media called How to Build Wealth as an Investor. And this ebook will walk you through from the beginning of how do you build a wealthy mindset, to how do you save your first couple $1,000s, to how do you start investing, to how do you start generating cash flow, to what are different types of investments, to how do you spend your money smartly, to how do you earn more money smartly, to how do you protect your assets. So this ebook is completely free. If you do want to read this ebook, I'll have the link for you also down in the description below. Now, to tie this whole video together, let's now talk about the Great Wealth Transfer 1.0. Now, to help explain what's going on, let me just read you a line directly from CNBC. It's a generation, speaking of baby boomers, that have accumulated a greater percentage of wealth than any other generation ever has. According to CNBC, it's around $68 trillion, but according to The Street, it's about $84 trillion. And to put these numbers in perspective, in 2022, the entire United States economy generated around $25 trillion in GDP. So you have a lot of money that has been accumulated by baby boomers that over the next decade or so will start to be passed down to the Gen X and millennial heirs. Now, the question you want to be thinking of is what is going to be the implication of all this money changing hands? Because there is an implication to this, and that is spending, selling, and taxes. Starting with spending. Now, I know this data is a little bit old, but in 2012, the Ohio State University published a study which said that Americans will only save half of their inheritance. That means the other half is getting spent into the economy to grow the economic system. And if you're saying, but Jaspreet, that was such an old article, people have become so much smarter with their money today. Well, if you look at how money trends have changed over time, it doesn't look like people have begun to become smarter with the way that they spend their inheritances. So from a practical perspective, if all this money gets transferred from one person to their heirs, you can bet that a big chunk of this money, we don't know exactly how much, but a big chunk of this money is going to be spent in the economy, which will help stimulate the economic system, which means somebody will go out and buy something, which means the people that get this newfound wealth will want to go out and spend this money in the economy and make somebody else rich. And naturally, along with that, you have the second thing, which is selling. Because if baby boomers are passing on their assets, whether it's real estate, whether it's stocks, whether it's businesses, you're going to naturally have a certain percentage of people that do not want to manage these assets, whether it's a home, whether it's a rental property, whether it's stocks, whether it's some investment portfolio, whether it's a business. And so you can imagine that there's going to be a percentage of these assets that are going to be liquidated into the economy because the next generation, the heirs of the baby boomers, whether it's a Gen X, whether it's a millennial, whether it's a Gen Z, they're not going to want to manage all of these assets. Now, some will, but not all of them. And that's going to create more opportunities for people to want to go out and actually buy these assets. In fact, I can tell you from experience that some of my best real estate investment deals have been estate sales where somebody in a family has passed away. The family didn't want to deal with the asset, they just wanted the cash. So then they were willing to go out and liquidate and sell this asset, this house, this property, this rental property for a discounted price. And third, anytime you hear of money changing hands, you have to think about taxes because the government will always want their cut. And that's probably why in early 2023, President Biden was pushing for a brand new wealth tax to be imposed, maybe as a way to get a piece of these assets sitting idle. So what is the Great Wealth Transfer 1.0? Well, this is elder people now passing on their assets to the next generation, and then the next generation going out, spending this money, selling assets, and giving some money to taxes. And of course, this does create opportunity, even if you're not getting an inheritance, by understanding how the economic system works and working to build your financial education. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.